Hello and welcome to Pro Trader Strategies Market Commentary for Friday, January the 18th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I am here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, let's get it on with some economic data across the pond. The only thing we really got was Great Britain's retail sales coming in at a negative 0.9%, expected to be a negative 0.8%. So a little bit lower than expected there. And last month's number was revised slightly down from 1.4% to 1.3%. So a revision to hurt it even worse. Not that it was a bad miss, but it was a miss nonetheless. And then back here to the United States, we have Williams speaking right now, and we also have capacity utilization coming out. It came out at 78.7, expected to be 78.6, slightly higher than expected. Industrial production upticked to 0.3%, expected to be 0.2%. They did revise last month's number down on industrial production slightly from 0.6% to 0.4%. And finally, University of Michigan consumer sentiment coming in at 90.7. One of the lowest readings we've seen in a while. Was expected to be 97 even, and last month's number revised up slightly only to 98.1, so it's not a huge revision there. But this is the lowest reading we've probably seen since October of 2016. So actually November 2016. Anyway, on to the rest of the markets. We've got crude oil moving higher right there to about the point where I expected it to go, right around the mid 50s. I don't think it's going to go, up into the 60s necessarily. It might go up and test that 60 handle, but I think the sweet spot is the mid 50s. So we could easily see this market bouncing between 60 and 50 for the next couple of weeks, unless there's some big shoe to drop showing a lot of economic push or something like that. But right now, with the economy the way it is, I just don't see a whole lot of upside in crude oil at this point, unless, obviously something changes overseas with OPEC or something like that. But at this point, it seems pretty in line with the way I'd expect it. We got gold coming off by about $9. Interesting enough, comes right down to the 61 Fibonacci and settles down there. That's been our support level for the past several weeks. This area right around 1260. So that I would expect to continue right now. I mean, I am under the belief that we should see gold coming back down into the lower 1200s. But that being said, we've got to get through this support level of this Fibonacci, and then I think we will see it quickly move to where the 50-day and the 200-day moving averages are starting to cross right now. If we can peel through that, there's just not a whole lot of volume here built up, and I think we could easily see it pop down. Doesn't mean that we couldn't trade in that range, but I don't think we'll just take one little step, start trading sideways. I think we're going to need a bigger move than that before that starts filling in that low node area. All right, the VIX is coming off as the equities are rising across the board for the most part, up against key resistance levels that I've been talking about for a couple of weeks now. VIX is coming off, but I think that it probably should be rising a little bit because of the way that the market's kind of setting up. We've kind of got, look at the Dow Jones Industrial Average here, up quite nicely today, and it's right to where the point of control is. Now, we would expect markets to settle down here in and around this point of control. It's where the most time and volume has been spent. It's where everybody is comfortable. Nobody feels like they need to cover good trades or puke out of bad trades or add to trades and stuff like that. It's like, this is where I bought it. This is where we are. I'm not going to add to it at these levels or get out of it at these levels, right? So that's the idea going through the mindset of the trader right now when we hit this level. Now, that being said, I actually have been waiting for a little bit of a pullback after 2 weeks of rallying here. unabated for the most part. I think that there's a time where we need to roll over, flush out some of those weak longs, and then resume back up to this area, maybe settle down. But I don't think that this is exactly the time that we are going to settle down now that we've gotten way overextended to the downside. I just don't see us overextending to the upside right now or retracing back to those lows. But I do think that there is a bit of a correction due at this point from this little bit of a rally. NASDAQ, again, trying to peel through those two Fibonacci resistance areas that I talked about. It's gotten through them right now, but we need a settlement above that in order for that to be a win for the bulls. So they are going to try and defend this area. It would be a good thing. It would get us back to that point of control that I'm talking about in most of these equity markets I've been talking about. We're going to migrate back there. It's just a matter of how long it'll take. E-mini S&Ps, similarly, trying to plow through some of that overhead resistance right now. Again, I don't think we're going to get high enough for the E-mini S&Ps to settle above there, but a settlement near the highs would be nice. Just like we got yesterday, settlement near the highs, continuation, settlement near the lows is going to be not good at this point, especially across the board in the markets. This is going to look like a very big topping pattern, or a very strong topping pattern, I should say. All right, let's look at the day chart. These are 30-minute candles. Each blue section is a day. Overnight, pretty much flat on the day. No attempt to get out of those longs that we saw really spike at the end of the day. This was a really wild ride in 30 minutes. If you went to the bathroom, you missed that move. And then settled down overnight, pretty flat. Nobody tried to cover those longs, so that's a strong bullish sign, right? And today we didn't, in the day session, even attempt to flush those guys out. So even stronger. So I would expect this market to continue with some bullish strength throughout the day. I don't know that we're going to see, several hundred points rally in the Dow or a 100-point rally in the NASDAQ necessarily, but I do think we're going to see some solid strength into the close for the equities. All right, let's talk about a couple of trades that I've done. American Express, if you guys heard me talk yesterday on the daily market commentary, you heard I was thinking about doing a couple of earnings trades. And that being said, American Express is one that I did. I tweeted these out yesterday also, you guys. I put it out there that I was selling puts in American Express and in Netflix. With American Express, I went in and did the January 95 puts in there, and I originally collected about 42 cents for those. Obviously, this morning, the market was starting to move in the wrong direction. I got out immediately on the open. If you guys remember, I talk about this in those earnings webinars when we're talking about specific option strategies for earnings. When and where to get out. I get out early in the morning on these, right? So I did with this as well. On those 95 puts, I originally sold for about 42 cents. I bought them back for 15 this morning. And then if we go over and look at the Netflix trade that I did. Let me get that going. Netflix, I also did an earnings trade for this, as I tweeted out, obviously. But with Netflix, I went in and sold the 315 puts. So it was the January that expire today. So I got all of that theta decay, all that gamma. Excuse me. The market maker move on this was about $25, I think, $25 or $35. When it opened, was down about 10. It did make a bit of a move to the upside, but I got out of these, like I said, right off the bat. And I did the January, sold the 315 puts in there for, what was it? $2.64. Sorry, I'm getting confused with my last earnings trade with Netflix. So I sold those for $2.64 on the 315 puts in there. I bought them back this morning for a dime. Interesting, it was just catching my eye. Back in December, I was selling 200 puts in Netflix. That was quite a nice long ways away from where we are today. A couple hundred points. or 100 points plus. All right, so yesterday's webinar was a really good one on short puts, going in there, talking about how we can take the fear out of all of this trading that goes on. If you go online and try and figure out how to do all this options trading, you're going to be sadly disappointed because you're still going to be nervous about putting on a trade. I break it down into small segments where you have essentials to success all the way down to where you get out of this trade, which is one of the most important aspects to know. Where do we get out? So I take that fear away. A lot of that will create confidence in your trading. And when you're a confident trader, you will be much more productive. All right? That's all I got for you guys. Have a great weekend. If you can't take that, take it easy.